Hey, it's Rob Weinberg, and on this channel, we empower people to take control of their futures through expert mortgage, financial, and real estate strategies. If it's your first time watching, go ahead, hit that subscribe button, and don't forget to also hit the bell so you get notified on the new content we're putting out every single week. In our lesson today, we're going to be talking about government-backed mortgages. What are they and how do they work? So first of all, how do government-backed mortgages differ from a regular conventional mortgage? So the main thing is that government-backed mortgages are insured or guaranteed by government entities. That would include FHA, the Federal Housing Administration, VA, Veteran Affairs, or USDA, the U.S. Department of Agriculture. And they differ in that they offer benefits and protections to lenders and borrowers. Really, it makes it so that a lender will be more comfortable making a loan, specifically to people with lower credit or that are more underserved. Now, these government-backed mortgages are only for owner-occupied properties. So generally, you're not going to be using a government-backed mortgage to buy a property for business use or for investment or second home. It's going to be a primary home that you're going to occupy as your primary residence. Now, why would somebody choose a government-backed mortgage over another type of loan that's available? Most common being a conventional mortgage. So number one is that a lot of these government-backed loans have much lower down payment requirements than other loans. So FHA only requires 3.5% down. VA and USDA require 0 down payment. So that's a huge advantage over conventional loans that, depending on the type of property, could require anywhere from 5 to 25% down. So in many cases, it can be a lot more advantageous to use a government-backed loan. Now, the common types of government-backed mortgages that are out there. So the main ones are going to be FHA, VA, and USDA. FHA, as I said, backed by the Federal Housing Administration. This is a really popular program with the first-time homebuyer crowd because it does allow only that 3.5% down. The other great thing about FHA is if the property meets certain criteria, they'll actually let you go up to a 4-unit property. So you can buy a duplex, a triplex, or a 4-unit with that same 3.5% down. Again, side note, the property has to meet some other criteria to get a 3 or 4 unit FHA loan, but assuming it does, it's the absolute best loan with the lowest down payment for that multifamily. Next thing is going to be VA, Veteran Affairs loans. These are available to eligible veterans, their spouses, or their surviving spouses. And VA is amazing because not only does it give you a 0 down loan with no down payment, but it also has no PMI, no monthly mortgage insurance premium, which is very common when you're putting a low or no down payment. So VA not only gives you a low to no down payment option, but it also gives you a lower monthly payment than almost any loan out there. So that's one of the great things about VA. And the last one is going to be USDA, that Department of Agriculture. This is to support rural areas, suburban home buyers as well with low to moderate incomes. So USDA is very specific in the areas that they'll let you get a mortgage in. So check with your advisor to make sure the area that you're looking in will actually qualify for USDA, as well as your income being able to qualify for USDA, as they do have limitations on that. So those are the different types. What are some restrictions on these loans? So USDA, as I was saying, only allows you to buy in certain areas and you have to make less than a certain income. So that's a restriction. And then the other government-backed loans, VA, FHA, they're available nationwide. There's no restriction on income. There's no restriction on the area. As long as the property meets the criteria, you're good to go. So generally, the most restriction is going to be on the USDA loan. Understand, though, that government-backed loans in general do have a little bit more restriction when it comes to property condition. So peeling paint, stairs without handrails, things of that nature that affect the soundness and livability, as well as the safety of the property, is something that can be called out by appraisers. So you will find a little more restriction around the appraisal when it comes to government-backed loans versus conventional, but it's nothing major. It's nothing that a good realtor or mortgage lender can't help guide you through. So those are more info on the restrictions. The terms. So how do the terms of a government-backed loan compare to a conventional or another type of loan? I'll tell you right now, government-backed loans almost exclusively are going to be way better on the interest rate. I had a scenario just a week ago where I looked at a program, both conventional and a VA loan for an eligible veteran, and the VA loan was almost a full percentage point better on this scenario, almost a full percentage point. So the terms on these government loans are very attractive. In almost all cases, you'll find that the government-backed interest rates are going to be better, especially now, than the conventional interest rates. They don't hit you the same for the different items on the credit score, different things like that, the amount of money you're putting down. The government-backed loans just don't penalize you like the conventional does on those. So generally, you are going to have better terms. But what are some drawbacks? What are some drawbacks on these government-backed loans? Well, I'll tell you right now that, in a lot of areas, especially when now the market's hot, government loans do get a bad rap. Sometimes a listing agent will get a government-backed loan pre-approval and say, no, we don't want that. Even though it's a good offer, they don't want that FHA or that VA because they know there may be issues like we were talking about on the condition of the property. There may be things that they have to fix that they wouldn't have to fix on another loan like conventional. So that's definitely a drawback, and it's something that requires some education by the entire mortgage and real estate community that these are not inferior loans. These government-backed loans are as good or better than conventional loans. So that's something to consider there. There are additional fees that need to be paid on FHA loans and on VA loans for upfront PMI. You're not going to find those upfront fees on other loans. They are financed in to the loan, so they're not coming out of pocket, but it's still something to consider as a drawback because when we're looking at that, you might be better off with a lower cost loan. We have to look at the entire scenario and what options are available for you to see what's the lowest cost and best deal. And then the limited availability for certain property types. So one of the big drawbacks I hear about these government-backed loans are that condominiums can be difficult with them. So there's specific VA and FHA condo approval lists. It can be difficult to get condos approved that are not already on there. I've definitely done it before, so it can be done, but it does require a little bit of extra time and some extra paperwork. So especially if you're looking at buying a condo, one of these government-backed loans may not be your first choice. If it is the only option for you, then you really need to be dealing with a lender that understands how they work and how to get a condo through the approval process for these government-backed programs. So I hope this has given you some insight, and I hope you found value in our lesson today. If so, go ahead and share this with someone else. Like, comment, of course, subscribe, and reach out to me if I can be of assistance to you or someone that you know when it comes to buying a home. You can reach me for a one-on-one personal consult. My direct line is 860-413-3938. As always, I hope that helps, and we'll see you on the next episode. Take care now.